Hi, welcome to Bond Bytes, a daily bond market highlights from INR bonds. I'm Arjun Patsarthi. And with the government releasing the GDP data for the full year of fiscal 2021-22, where the nominal GDP, that includes the inflation figures in the country, came in at 19.5%. This is the highest seen in almost, I would suspect, about 8 to 10 years. And with the real GDP, which is adjusted for inflation at 8.7%, it clearly shows that inflation in India is at double-digit levels. And this is largely because the wholesale price inflation has been trending at way above 10% levels over the last many months, showing that inflation pressures are very high in the economy. Just before we continue, download our app, Quick Invest by INR Bonds, where we show the best bonds to you to hedge against inflation and the best bonds that are enables you investors to get returns that are higher than inflation, where in times of fixed income, where returns in fixed income products are low, the best bonds will give you the best alternatives for beating inflation. And INR Bonds, Quick Invest by INR Bonds app shows the best bonds with the most information, transparency, and the best in-house in-app investment process. Download the app now.
It was a tough journey going from an intern to a senior professional. Now, to protect my savings against high inflation and grow my wealth, I invest in bonds with INR Bonds. Download the INR Bonds app to save better.
Coming back to the bond bites, then GSEC yields was flat at 7.41%, while Sensex and Nifty and the rupee were moving here and there. So coming back to the GDP, nominal GDP, clearly when there is high nominal GDP, that means even the numbers on fiscal deficit as percentage of GDP comes down, but in absolute terms, fiscal deficit is still high. So the government was able to show lower fiscal deficit for last year than budgeted, largely because nominal GDP was much higher than estimated. So it's very important for RBI to start to control inflation numbers now. Their policy is next week, and the markets are awaiting rate hikes by the RBI. And again, there are a lot of liquidity pressures in the sense that there could be money going out of the system, and a lot of corporates are finding it difficult to raise funds now. They are rushing to the market to raise funds before interest rates go up and liquidity dries up. Investors have to be smart here, find the best corporates, then ask for the best levels of returns, because it is in buyer's market, not a seller's market at this point of time, giving rising interest rates. And INR Bonds tells you as it is. And listen to Bond Bytes, or download our app, Quick Invest by INR Bonds. Visit our site for all the research that you want on fixed income markets. Get the training that you require. Then if you're a financial advisor, INR Bonds is the platform for you to give you the best options for your clients. Thank you very much for listening in. And if you have not subscribed to our YouTube channel, please do so.